Hey, traders. Welcome back to Awesome Forex Tanzania. So it's normal as usual. Usually we drop various contents pertaining to trading, and mainly we are trading Forex, but sometimes we do things on cryptocurrencies, but usually Forex is everything. So welcome back to Awesome Forex, and here is a free training. As usual, we're dropping a free training all the time when actually get time. Yes, we prepare sessions. We prepare various sessions, and these are the free sessions. But we'll have paid sessions as usual for those who know the one-on-one. Also some face-to-face classes. Also have paid webinars and other things. So everything is running. Everything is running. But on YouTube we have those who call the free sessions like this. So welcome to Awesome Forex again. Today we have a new content. We're going to share a new thing, and basically it is from what to call the indicators. Actually, we'll cover things on technical indicators, but before covering that, remember you have to visit those links to our social media, whereby you have various buttons there. You have a button for broker LITEFOREX, then you have a button for TICKMILL broker, then you have for Facebook, for Instagram, and also for Telegram. Actually, you can click any button there and it will take you directly to a specific area where you want to go. So you can do that thing in just a minute, and then we carry on with our session. So welcome to Awesome Forex. Now let's see our whiteboard. Our whiteboard there, it shows that today we have to cover things on what to call the technical indicators. So mainly I'm going to give you a general view of what are the technical indicators, but specifically I'm going to discuss one of the most common, the most used indicator, which incorporates many informations. Actually, I'm telling it as most useful because it incorporates many informations. Once you have it in your price chart, it may help you to get many information. And this is mainly a MACD. I'm going to dig deeper on MACD because many people they know just a single type of uses of MACD. So I'm going to dig deeper and discuss four ways on which you can use a MACD indicator. That will be my target today. But before going to MACD, I will shortly introduce what is an indicator for those who are new on the issues on indicators. They can understand what are the indicators and the significance of them. So mainly indicators, we call them as technical tools. We call them as technical. They are technical. Indicators, they are technical. They are technical tools which are used to tell the movement of price. Actually, they are technical tools that tells movement of price. They tells movement of price. The movement of price. So those are what we call the indicators. But mainly those indicators, they tell you the movement of price in the past. They tell you the movement of price in the past and in the present. Actually, they tell you information about the movement of price in the past and in the present. So after you already have information from indicator about the past and the present, you may assess what we call the probable direction of price in the future. So by having those information from the past and the present, you can assess the future, or you can anticipate the future movement of price. So those are the technical indicators and how they are used. Actually, they are used in assessing that future movement of price. So most of beginners, especially beginners, they mostly rely on technical indicators. They think maybe having an indicator is everything or what and what. But remember, indicators, they are used as supplements. Actually, we use them as supplements. They supplement to what we do on technical analysis. Mainly when we are dealing with maybe trend lines, we are dealing with zones, when we are reading candles. So additionally, we can add an indicator. But there are certain traders who depend mostly on information from indicators. But what you're supposed to understand is that the utility of indicator usually may change, and actually they are not 100% maybe perfect, or their efficiency isn't 100%. So you have to add other things from from what we call the pure price action. You must have those things from pure price action, and an indicator will be used as a supplement. So now we have various types of indicators. If you open a price chart and search for indicators, mainly you find there are different types of indicators, but all of those indicators that we have, they are grouped maybe based on various criteria. Actually, we have various criteria that are used to group those indicators, but there's no need to dig deep on those things. But mainly you have to understand that you can classify indicators based on maybe direction of movement of price. Maybe I don't write those informations because they are just like informations. Just I'm giving you informations, but mainly I want to dig on the MACD. So we can classify them based on direction of movement of price, whereby indicator can be maybe a leading or lagging indicator. I think you can read about those things, the leading and the lagging. But also you can classify them based on kind of movement exhibited by indicator, a kind of movement exhibited by indicator. Sometimes some indicators they are maybe some indicators they exhibit various types of movement, like what to call the zero line cross, a zero line cross. Yes, some indicators they give you some information by crossing maybe a zero line, but some indicators they exhibit such movement like crossing each other. We have indicators that cross each other, so we have a cross each other indicators. So now we have various ways of classifying them, but also sometimes you may classify them based on what indicator show, what is shown by indicator. So based on what is shown by indicator, we can have things like the oscillators. We have some indicators known as oscillators. So all of those things that I'm saying here, you can find them in platforms. When you are searching for indicators, you can find categories of indicators. So you can find that you have a category of oscillators. So within oscillators, you can find there are various types of indicators there. So when you are searching for indicators, it means, maybe for oscillators, it means you are looking for those who call the momentum indicators that show a momentum. So one thing which is very important, and most traders they don't consider that. Usually most traders they don't know about what are the specific indicators based on what type of traders they are. So one thing that I tell you is one thing that I tell you today is that when you are searching for an indicator, you must look for relatedness with the type of trading that you are doing. Some traders maybe they are trading reversals. Some traders they are trend followers. They are trading based on trend. So if you are a certain type of trader, you have to choose a specific type of indicator based on which trader you. So maybe I will add those information later, explaining maybe which trader may use which type of an indicator. So based on what they show, we have the trend indicators. Also we have things like volume indicators. So those are categorization of indicators. But now let me go to my target. My target is to discuss what to call we have many indicators, but today I'm going to dig deep on this, what to call the moving average. Now the moving average, convergence, what to call the moving average convergence, divergence, something like this, divergence. Yeah, the moving average convergence, divergence. So now this is one type of an indicator, and why I choose to explain about this, because once you know how to use it, actually it covers the need of having many indicators in a price chart, because it may actually overcome the need of having maybe volume indicators, having maybe momentum indicators, having the trend following indicators. Actually there's no need to have all of those types of indicators, because it incorporates all of them. It gives you information about volume, about trend and other things if you know how to use it. And today I'm going to explain about those 4 uses. Usually most traders use they concentrate on one use, on one function of MACD. This is what we call the MACD in a short form, the MACD, a MACD. So most traders, they concentrate on just a single use of MACD. So today I'm going to explain about 4 uses of MACD, or 4 ways on how you can use a MACD. So now if that's the case, let's first understand what is MACD. Before digging on functions, let us understand what is MACD. So mainly MACD, as I said, is the moving average convergence divergence. So mainly based on categorization, as I said, it covers most of functions performed by other indicators. So we find that it is a trend indicator. First of all, it is a trend indicator. So when I say that it is a trend indicator, it means it shows trend. It shows trend of the market. Okay? It shows the trend. So now this is moving average convergence divergence. So it do the same function as moving averages. Those who call the normal moving averages. Actually, it is made up of moving averages, but it is not like those normal moving averages. It is somehow tweaked. So now we have, and I mean, it shows the trend and also moving average convergence divergence. The MACD also, it may show you a momentum. So it is a momentum indicator. It is also a momentum indicator, or sometimes we call it as an oscillator. So you can find it within the category of oscillators. Being an oscillator or momentum indicator, it does the same function as an RSI. And also MACD, it is a volume indicator. MACD is a volume now. It is a volume indicator. So being a volume indicator, it means it shows you volume. So by showing volume, it works the same as, I think it is like those who call the stochastics. It works like those who call the stochastics. It shows volume and other things. So that is MACD. Based on categorization. So it falls within various categories. It is just a single indicator, but it falls within various categories of indicators. So it incorporates many informations. That's why I've decided to choose this, to choose explaining it, but also I use it. Doesn't mean that I only explain it, but also I use MACD, and also I have other indicators like the RSI. I use RSI and MACD. Those are my two major indicators. So now we have some preliminary information on MACD. So I'm just giving you those information, then we could go straight on how it works and other things. So now MACD always, as I said, it is a moving average convergence divergence. So it is made up of 3 moving averages. There are 3 moving averages. Now actually they are incorporated together, so they generate information in somehow a different way, from those normal moving averages. So now it has 3 moving averages, whereby we have a 9 period moving average. We have a 9 period moving average, and also we have a 12. We have a 12 exponential moving average, and then we have a 26 exponential moving average. So now there are 3 moving averages there, so they are incorporated together. It doesn't mean they are just free. You can see them as how usually we see moving averages. No, it is now they are incorporated together, so they generate informations in somehow a different way. So now, having those informations from 9 moving average, the exponential moving average, and the 26 exponential moving averages, we have the 9, the 12, and the 26. Actually, they are incorporated together, those moving averages. So now MACD structure, it has been composed of 3 things. Actually, it has got the things, and mainly it shows two lines. It shows what to call the MACD line, and also it has what to call the signal line. It has a MACD line and a signal line. So those are two things that we see in MACD. So we don't see maybe those three moving averages. Basically we see only two lines. We only see two lines because there are certain mathematics that have been done there to incorporate those moving averages, whereby a MACD line is the product of differences between a 12 moving average and a 26 moving average. So a difference between those two moving averages, they gives what to call a MACD. And also have a signal line. A signal line is straightforward a 9-day moving average. Now it is just a single moving average. So it is just a nine period moving average. It gives what to call a signal line. But additionally, MACD has got what to call the histograms. Histograms. So now it has got what to call the histograms, whereby histograms, those are derived from MACD line. Now they are derived from MACD line and signal line. So it is now simply call them histograms as derivatives. Now we simply call them as derivatives of a 9 period moving average and a MACD line. So it is just a matter of mathematics, but there's no need to go deeper on its formation or construction or what. What we're supposed to know is how it operates. That's very important part, to know how it operates. So now mainly I can simply show you what is MACD. Let me go to the price chart, but I'm sure most of people they already know what is MACD. I want just to show you before we go on functions, before we go on uses. I want to show you what is MACD. So now I have my price chart there, and this is gold actually. So on gold, forget about my projections and other things. What I need to show you is how to insert an indicator. If you are using trading view, you'll have FX there. This is for indicators now and the strategies. So you will search for MACD. You will search for MACD there. So after hitting on MACD, now we are using MACD, not a MACD strategy. It's just a MACD. After hitting there, you'll have it now. You'll have it there. A MACD. This one. A MACD. This is MACD indicator. So this MACD now. MACD, I want to explain it, those informations that I was explaining there. It has got those two lines, so we have the first blue line there, we have this one, a blue line. This is a MACD line. Now this is a MACD line, and then we have this one, the second line there is the signal line, a 9 period moving average, a signal line. And this one is a product of difference between a 12 and a 26 period moving averages now. So now we have histograms. As I said, these are the histograms, those bars there, these are the histograms. So everything there has got its own information that it provide, and knowing how to interpret those informations given by everything in MACD, it will help you to trade now profitably by using this indicator, because it incorporates many informations. So let me go to uses, then I'll be back again to MACD. I'm going to use it, and then I'll be back again to this MACD. So now let us see those who call the four uses of MACD. Let us see what to call them as 4 uses of MACD. Now MACD, mainly most of mentors and traders mainly they concentrate on just a single use of MACD. Always, I've been watching various videos when I was learning. I've been listening to many mentors and other traders and other things. Actually, I found that they concentrate on a single use of MACD. So today I'm going to dig in detail. I'm going deeper, whereby I'm going to explain 4 uses of MACD. And before explaining that, I want to remind you one thing. It is about a Forex course. Now here is some Forex curriculum and training fees for the first edition of 2021. So we have this curriculum. It shows what you're supposed to start, and also we have fees there. This is usually used for our face-to-face and online classes, and also we have group classes, and also sometimes we can have the one-on-one classes. So we have been using those prices there, and we are using even now. But most of learners actually they fail to pay those fees. They like to learn, but they fail to pay those fees, especially from Tanzania. Actually, my fellow from Tanzania, they fail to pay those fees, but they are much interested to learn from Awesome Forex. So now what we're going to do now for the coming year in 2022, what we're going to do, we're going to show the seminars. We'll have a timetable for seminars in various Tanzanian regions. So we'll be visiting various regions, including Dar es Salaam. We'll have Morogoro, we'll have Dodoma, Arusha, Mwanza. So these are some of regions, and also including Zanzibar. We'll be in Zanzibar also. It's where we'll be doing seminars. So in seminars, you are going to pay just minimum amount. From what I've been indicated here, you'll pay minimum amount, but you'll have the same training like those done on the one-on-one, or like those done on our webinar or face-to-face classes. So get ready for the seminars, and make sure that you subscribe to this channel, because we'll be updating those informations about seminars through this channel. We use this channel as our platform for giving those informations about our seminars. So make sure that you subscribe in order to stay up to date about informations on those coming seminars. So now let's go to uses. Now of the MACD. And here is a very important part to understand. It's a very important part to understand. It is more than what we have covered now on structure of MACD or organization of MACD and other things. So now MACD is used in various ways, but I'm going to cover 4 ways. The first way on how MACD is used, it is based on MACD and signal line crossover. We have this we call the MACD. We have this we call the MACD and the signal. MACD and the signal line crossover. MACD and the signal line crossover. That's the first way on how you can use what to call a MACD. So later on I'm going to explain them. I'll go on a MACD indicator. I'll open a MACD indicator, and then I will show you what is MACD and signal line crossover. But this is the mostly used way. This is actually the most way on which traders use MACD. But we have got other ways like MACD line crossover or below zero line. We have other ways like MACD crossover. It may cross over or below. MACD may cross over or below zero line. So whenever MACD do that, actually you must get certain informations. And also we have things like divergence. We have the divergence between MACD line and the price. We have divergence of MACD. Here we have another use, the divergence of MACD. Divergence of what we call the MACD now. MACD and the price. Short list like this. And the last use, I said that I'll explain 4 uses or 4 ways on how you can use MACD. Now the last use is based on length of histograms. The last use is based on length of histograms and length of histograms. So those are the 4 uses of MACD indicator. So I'm going to explain one after another on how you are going to use it and how you can get information based on that type of way of using a MACD indicator. So let's see how you can use on the idea of MACD and signal line crossover. So when I'm explaining this, I think it will be clear if I'll be on MACD indicator. It's better if I'll explain it while I'm on MACD indicator. So now I've talked about the MACD line, this one, the blue one, and then I've talked about the signal line. So when we're talking about the MACD line crossing over the signal line, it is something like what has happened here. Also, it has happened at that point, at this point also, at this point. So here MACD crossed over a signal line, so it went there, then it crossed again. So once it is crossing a signal line, it gives you certain informations about the future move of the market. So usually, in a simple way, when MACD line crosses over the signal line from the downside to the upside, usually this is an indication of a bullish momentum. And when it crosses from the upside to the downside, MACD line crosses the signal line from the upside to the downside, this is an indicator of a bearish momentum in the future move. So that is a simple way on how MACD is used. But now additionally, in order for this principle to work, actually when MACD is crossing a signal line from the lower side to the upside, for you to take a buy trade, MACD line and signal line, they must be above a zero line. So where is the zero line? Here, in between here, you can find that sometimes histograms, they are built on the upper side, sometimes they are built on the lower side. So between those upside and downside histograms, this is a zero line. So for you to take a buy trade, when MACD crosses over a signal line from the lower side to the upside, MACD line and signal line, they must be already above a zero line. So that is the principle for better trading, for better results. In order to trade successfully, you have to observe that condition. And when it is crossing from the upside to the lower side, when MACD line crosses a signal line from the upside to the downside, in order for you to take a sell trade, MACD line and signal line, they must be already below a zero line. So that is a principle and you have to observe it. So that's how things goes. And then the second use is MACD crossover or below zero line. MACD crossover or below a zero line. So now this is another way on how you can use it, whereby we already have a zero line there. When I was explaining, we have a zero line here. So you can find that sometimes MACD and signal line, they are moving above a zero line, and sometimes they are moving below a zero line. So what we need to consider a point when MACD and the signal line, they are crossing a zero line. So usually this is used to show a change in trend. It is just in a short-term trend, actually, a change in a short-term trend. When MACD and the signal line, they are crossing a zero line to the downside, this shows a short-term downtrend. It shows that this is a short-term downtrend. And when MACD line and signal line, they are crossing from the downside to the upside, they cross a zero line. When they are crossing to the upside, this shows a short-term uptrend. So that's how you are going to use. That's how you are going to use what to call the MACD line crossover or cross below a zero line. You're going to use them that way. Another thing is divergence of MACD and the price. Divergence of MACD and the price. So on divergence, on divergence, we will consider the idea that maybe let me go to the chart. Maybe let me show you the chart now, the price chart and other things. I need to make clear on the idea of divergence. I need to show maybe somewhere where divergence is seen. Divergence, yes. Let me check this area. Maybe I can put it on a line, this one. On a line like this. So now divergence, usually I can explain it from this point. Now from this point, MACD and signal line, they were moving upside now. They were rising actually. They were rising. The same thing was happening on the price charts. They were all of them moving up. So as they kept on moving up, they shortly corrected down, and then they kept on moving up again. Now price was kept on moving up. So now the idea here is price and MACD, they were forming higher highs up to this point, higher highs. So it went down. So we were expecting this point to be higher than this previous one. That's how it is in the price. Now this point is higher than this previous. So at the same point in the price chart, we have higher high, but similar point in MACD we have lower high. So this is what we call divergence. The same or the corresponding points in MACD and the price chart, they are moving in opposite direction. These are corresponding points. Higher highs in the price chart, lower high in MACD. This is what we call divergence. So divergence is the sign of exhaustion of momentum in a particular direction. It shows exhaustion. So this direction is going to end very soon. If we have divergence, this is an indicator that this direction, the upward movement is going to end very soon. So we are going to look for the downward movement or the downward momentum. Now it's going to build a sell momentum. So this is what we call divergence and how it works. So we will incorporate things like example here. We already, now I have my analysis here, and now my projection shows that gold is going to sell. Things goes like this. So now in order to get confluence, I mean how I had the confluence for this projection, one of my information for anticipating this direction is from this divergence. After having divergence, so I look on other things. I incorporate things like wave counts. I already have 5 wave up, so I expect a correction here, can be an ABC or anything else. So I incorporate things including what are seen on MACD, things like divergence and other things. Then I can add things like the idea of histograms. Now the last use is length of histograms. So on the idea of length of histograms, we have two ways on we have two ways on how we can obtain information from histograms. We have two ways of obtaining information from histograms, whereby sometimes we can have histograms hitting a zero line, and sometimes we can have an idea about longer histograms. So when histograms, they are hitting zero line, they are usually indicates the beginning of momentum in a particular direction. They usually indicate the beginning of momentum in a particular direction, because the histograms, they give us information about momentum, the issues on overbought and oversold conditions, exhaustion of momentum in a particular direction, and building up of momentum in a particular direction. So when histograms, they are short, actually they may indicate building of momentum in a particular direction. And when they becomes longer, when they become longer, they indicate either an oversold. Example, they were longer to the downside. Here they indicated an oversold condition. And when they are longer to the upside, they indicate an overbought condition. So for those traders who are trading reversals, they can use this idea. When you have longer histograms like this, you can expect exhaustion of momentum in this particular direction, so you'll expect it for the reversing of price. The same thing happens there to the upside. So how we are going to use them? And when histograms, they are short, while MACD and signal line, they are maybe to the upside, so we expect for the building of momentum in a bullish side. And when MACD and histograms, they are to the lower side, and histograms, they are short or they are hitting a zero line, we expect it to build a bearish momentum. So those are some of ways on how you can use MACD indicator, and mainly how you can incorporate information from various components of MACD in order to anticipate a specific direction of or a future path of the market. So that is all, and thank you for your time. I welcome you again to Awesome Forex, and I expect you are going to learn a lot, because we still drop things, we still drop free contents. Before having seminar, we will still be dropping contents, and especially those from Swahili sessions. We have those series of sessions in Swahili. We have a course in Swahili, so make sure that you follow them. And also on English, we still drop various sessions, and actually they are from various concepts. So thank you for your time, and welcome again to Awesome Forex.